Okay, guys, welcome back. Now it's Trade with Crazy version 10.4 revision of 11 March market. Now, do one thing to note, guys. You have to change your KCX to 3.1 so that the KCX line is no longer available on your screen. I still see some of you haven't changed it because when you send me a screenshot, if I see the KCX there, I know that that is wrong. Why we take it out? Because that one is not the when we wanted it to be there, we realized that now the new KCX is more into the green shaded area. So the previous algorithm doesn't make sense anymore. So that's why we want you to focus when the green color turn around. So if you heard me earlier, it's all right. You know, why am I buying Tesla? Why am I buying the Dow Jones? It's because of the green area flipping up. So you need to focus on the latest green area at the extreme point. That is more important. Yeah. So take note of that. Okay. All right. So let's us take note of that. Okay. Let's look at the revision for the day itself. Let's go. Okay, guys, this is the Dow Jones as of yesterday. This is where things get really, really crazy yesterday. So let's take a look what happened. Okay, so first of all, you can see that Dow Jones yesterday opened at 41,924 and it went up to touch pivot 42,003. And once it touches there, you notice that the market just couldn't go higher. And with the pressure from MLP, MA 30, MA 200, all right, it's a strong sell. Can you see that? So once the market hit the pivot and pull back, that was the first sign of trouble that you can take to short the market, especially when the KSI and the KCX are all at the bearish side. So it's very simple. If everything negative, but the market goes up, right? Once it hit resistance, the market will pull back. This one clear or understand? If I understand, press the next number 3. Okay, so it's like that. I repeat. So if the market is below MA 30, MA 200, and KSI rate, then the market opens, right? Once it opens, once it hit any technical point, usually that warrants a sell down. All right, it's the same thing. That is for a bear market. In a bear market, such thing happen. So in a bull market, it's opposite. The bull market means they hit a support and then it trade below OP, but hit a support and then you recover from there. Yeah, for the bear. So for the bull, I draw it for you. It's like this, where the market opens and then there's a technical point. The market comes down and then recover. Here is where you can look for buy in a bull market situation. Okay, very different. Yeah. Okay. All right. So with that, let's take a look at the 5-minute chart and you can see this how it developed the whole day. Yeah. Okay, so the start of the day, it was sideways, and then it zoomed into the KTR -1 already. That was very, very fast. Then it came to KTR -2, but missed the thing by a fraction and recovered, okay? And it's a diamond, right? So you draw a line at the diamond, and that was where you enter a buy. Now, why you going to buy here is because there's a technical point, which is the KTR -1. So when I bought it itself, right, the market goes up. My first TP will be OP because that's the nearest technical point. I booked some profit here. Then I see sideways. Then after the pivot one, that was where I got my second position out, and I was like, okay. Then you notice the market KTR +1 is just on top, right? So near KTR +1, but you notice the market just couldn't go near there. Keep on fishing, and I tell myself, wow, the distance that it hang there will be the same distance that's going to sell down in the market if it happens, right? So when the market finally hit KTR +1, we book our profit, we were happy. But if you notice that there's a diamond there, if you draw a line across it, then you see the changeover here. Yes, the changeover between from yellow turns to red. So you notice that whenever the diamond is there, the turnaround color from yellow to red is a very, very crucial turning point. Very crucial. So after that itself, you can see another diamond here. Oh my goodness, that was confirmed. The market now this time now take advantage of pivot one to sell. So the market basically touched the diamond line, fail, reverse to a CCYR, breaks it down, break below pivot. Oh my god, that's sell. And once it goes below OP, confirm you must sell. That was something that I don't understand. Some of you say, Kel, why sell? I say, why didn't you sell? They say that because the market has went up quite a fair bit and the market consolidated quite a bit, so they believe that it's going to go up. Guys, I know that your belief, your understanding of the market can be much better than me, but the thing is this: as a technical trader, when it's below OP, you just have to sell. You have to sell. Especially you see on top, there were diamonds on top. You can see the market trade below the white line. All these are classic sell signal. And of course, the KSI and the KCX are all bearish. So that was not difficult to do. And when the market actually recovers and purposely touch the OP like this, can you see on the screen right now? purposely touches that and then pull back. Oh my goodness, that was really a very easy trade. So that was where I basically shorted even more here and then bought back some over here and bought back some over here. Now the Dow is crazy. I understand, like this particular bar, I also got shocked. It was on the way down suddenly. Oh my goodness, he went all the way to KTR -1. And after that, come back down again. It's crazy. So what is happening here? There was two prong on this. One, there was some little news about certain thing. Then the market basically say that no, that news is not really real. Then the market just do what it do. And of course, the market pulls all the way down to KTR -3, and that is where I stop my trading for the day. Okay, all right. Then after that, the later part itself, you can see the market really going down. But because it's pivot 2, right, it's become a support here, and the market just couldn't go down. Recover, try again. Finally, it broke. Okay, this time around, 2 diamond. This time you draw the line. And then this time it went all the way down, all right, to about 41,180 level before staging a one big recovery with diamond to recover all the way back to KTR +1. Okay, so with this example, what I explain to you is that you have to follow rules and all this little thingy itself, right? You must know how to take advantage of that. Yeah, this is very, very, very important. Okay, so let's look at the next market right now. It's the gold market. Now, gold market, I already told you yesterday, that is a 2888 KCL line. It's a very, very powerful line. As long market stays above the KCL line, you just have to stay by. Correct now? You remember this? Remember this price number 4 right now. I did say yesterday that if the market breaks above KCL 2888, it's time to buy into the market. So, all right. So this is something that to watch out for. And now the thing is this, guys, if you look at this real very beautiful, yeah. The market once open, right? There is this KCB here, right? This is the KCB of the candle. Now, this means that if the market goes up, right, it will cover. So that's why yesterday when gold go up, I was telling a lot of you guys that gold may cover the KCB, and it really, really happened. All right, so the thing is this, you can see what happened over here. Initially, gold came down first, but hit KTR -3 very nicely, and then it's a diamond over here, you draw. So you just have to go into buy here. All right, very simple. And you just buy all the way to pivot 1. Can you see that? Very, very nice. So this is how you do this thing here. Okay, then after that, you went sideways for a longest of period. Then after that, is try to go to KTR +1, +2, sorry, miss it and pull back. No, something is wrong. And then after we came back down again, that was where the diamond is. The market purposely touches there. Hey, sorry, this S&P. Oh, my bad. Sorry, my bad. My bad. Ayo, so when I find the chat so funny. Wait, sorry, my bad. Oh gosh. Haha, sorry. This is the hey, wait a minute. Oh, I miss. Oh dear, I know that's what happened. Okay, my bad, guys. Okay, sorry. Ah, gosh. No wonder I find the chat so funny. Never mind. The gold chart itself, right, is gone because I think I didn't print it on the right side. Ah, gosh, shit. My bad. Okay, anyway, talk about this S&P then. So S&P, we have it simple, meaning here miss the KTR +2, and then we draw the line. Now you notice this, guys. Now I want you to take notice of this. Whenever there's a diamond, yeah, the turning point is very clear. Is that when you move above diamond, you buy. That one is understandable. But once you notice when the market come down and break the white line, right, with CCYR, you can notice the selling is going to be quite a fair bit, right, especially nowadays. So that's why this diamond, right, you must always do the ACDC, meaning that when the diamond is there, you draw, you buy is okay, but once it turns below the white line, you just have to sell. Can you see that? Oh, this one I want to try to explain here itself. Okay, so apology on the gold side, I missed out that chart. No longer cannot get back already. Yeah, that's gone already. Double print on the gold side. Okay, never mind. Let's continue. Okay, so this is crude oil. Now, crude oil yesterday went up, right? And the thing is this, people say, how come the crude oil goes up yesterday? Like I told you guys, when everybody sell, that's where you went and buy. So yesterday when the market was coming down, right, crude oil didn't go down. And I tell you the day before that, crude oil can start to watch out already, right? Okay, so what was the reason? Because of I told you the KCX is turning up. Remember? The KCX was green, right? It was green, but you notice the green and compared to the green here itself is different magnitude, right? Can you see that? And of course, the next thing is that you can see the market now no longer having the green KCX. So this is one very good sign that's happening. And of course, when the crude oil is recovering or supported, all right, the market should go back up again. And of course, if you go back up, the stock market will also benefit. So just take note of that. Very, very important. All right, so let's look at the crude oil, and you can see here there's double diamond. That was one good call, buy call over there. And then after that, one single four diamond, and then you draw the line and look at it, so beautiful. The market went up first, but once it crossed over the CCRY this time, the KSI has been green all the way. The KCX also black. So this is a very, very good buy candidate. Very good buy candidate. So the first target was KTR plus one, done. MLP, done. KTR plus two, done. You can see that? Yeah. Now when it's turning point, you can see that the four diamonds here you draw. You see again when it goes CCYR, that is where the market sell off. All right. So guys, this is how we want you to trade. It's really no context. You don't see me talking about fundamental on anything else except technical, and it does work. Okay. All right, this is Hang Seng chart also going up very nicely. Now, Hang Seng is a potential elephant trade, yeah. So watch out for Hang Seng. Those who missed the last time, you don't want to miss this time. So check the Hang Seng trade for today. You will see something interesting. And then, of course, right now we're talking about the next market is this called DAX. All right, the DAX breaks down, but KSI is green in color. And of course, for DAX, you can see that every time when there's a diamond, you draw the line, and the market, if cannot be, it will sell. And of course, if there's a lot of MA down there, that will be telling you it's either like this or like this. And in this case, the market chose the downside. Okay, guys, so it's very simple. My system itself is that simple. You just have to keep on repeating like a burn recorder, and it should work like a jam. Okay, so apology on the go side, but the rest itself, I think I've covered, and I don't think I have any more slides for you to take a look. So the rest is simple. Let me just see Nasdaq. It's a bit complicated. It's a lot of yesterday Nasdaq got a lot of diamonds. Yeah, a lot of diamonds. But if you actually follow through, you should be able to get it still. Okay. All right. Thank you for this morning. Apology on the go, but I hope you guys have enjoyed the session, and I'll see you guys tomorrow again. Bye bye.